Here's how I spot early warning signs of an economic and financial reset before the headlines catch up. First, the bond market. If long-term yields drop below short-term yields, an inverted yield curve, that's the market whispering slowdown ahead. It's not instant, but it's one of the most reliable signals. Next, credit spreads. When high-yield bond spreads jump versus treasuries, lenders want more compensation for risk. Translation: stress is building under the surface. Watch liquidity. If short-term funding markets get weird, TED spread or SOFR spikes, that's the plumbing of finance rattling. When the pipes shake, problems travel fast. Bank behavior matters. If banks tighten lending standards, pull back on credit cards, auto small business loans. The Fed's Senior Loan Officer Survey is a free reality check. Corporate health shows up early. Falling profit margins, rising interest costs, guidance cuts. If earnings roll over across sectors, especially shipping, semiconductors, consumer staples, that's breadth you don't want. Jobs are lagging, but the turn is telling. Initial unemployment claims ticking up, rising permanent layoffs. Keep an eye on temporary help employment and work week length, they tend to turn first. Manufacturing and services pulses, PMIs slipping below 50, new orders falling faster than inventories, export orders contracting, signal demand is cooling globally. Housing is a sensitive gauge. When mortgage rates jump, existing home sales stall, days on market rise, price cuts spread, construction slows next. Consumer strain shows up in delinquencies. Credit card delinquencies climb, auto loan delinquencies climb, BNPL defaults tip up. That's stress at the household level. Market volatility tells a story. VIX surges move. Index surges, rising dollar, falling emerging market currencies. That's global pressure. Sovereign risk spreads widening. Italy versus Germany, high debt countries versus benchmarks, can foreshadow policy stress and funding trouble. Commodities can be the spark. Sharp spikes in energy prices, sharp spikes in food prices, act like a tax on consumers and can flip growth to stall. Policy shifts are huge. Emergency central bank facilities, surprise rate moves, sudden changes to deposit guarantees, capital controls chatter. Those aren't normal, they're signals. And watch the safe havens. Gold rallies, Bitcoin rallies, risk assets slide. That's flight to safety. Here's a quick dashboard I track. Yield curve shape, high yield spreads, bank lending standards. PMIs, earnings guidance margins. Initial claims, temp jobs, work week. Delinquencies, housing trends, consumer sentiment. VX move, dollar index, short-term funding stress. No single metric calls the reset. But when multiple lights flash yellow or red at once, I get cautious. Hold more cash, trim, leverage, tighten risk. Stay curious, build your dashboard, don't wait for the official announcement. The market usually tells you first. Thanks for watching. If you want a deeper dive on any indicator, drop it in the comments and I'll break it down.